So the Bank of Canada just dropped a new article talking about how 60% of people who are paying mortgages right now are going to be paying a higher amount at some point in 2026. And this is largely because of the historically low interest rates that we saw back in 2020 to the first part of 2022 before rates started to go up and prices started to go down. It's going to have a big impact on a lot of people, and the monthly payment is really at the core of how the housing market works. And based on the cheap rates that people were getting between 2020 and the first part of 2022, they were able to afford much more house than they might be living in now. And there's a good chance that the house that they paid for at that time is worth less now. So even if they sell it, they could still be underwater. This is the situation a lot of people are going to find themselves in, and we don't know exactly where that's going to lead, but it's not going to be a good thing, and there's going to be a lot of pain for many people. So today I thought it would be worth taking a little bit of time to chat about how much your monthly payment might go up by and what that's going to look like for you going forward and what your options are to maybe get out of a situation that you're in that is not great. So let's say you bought a place when the rates were at their absolute lowest and you're paying about 1.8%, your monthly payment's about $2,000. Now, depending on the term of the mortgage, it's going to look a little bit different. If you get a 3-year or a 5-year fixed, it's going to be different than if you get a variable. But let's say you're paying around 4.8%, which is around the average of what I'm seeing people pay these days. You're going to be paying about $2,400 per month now. So that's $400 extra every month. That's not going towards groceries. It's not going towards your car payment. It's not going towards stuff for your kids. It's going just towards your mortgage. And it's not going towards necessarily paying your mortgage down, because what's going to happen when the rate goes up that much is more of your payment is going to be going towards the interest payment and less of it is going to be going towards the principal. So not only are you going to be paying a significant amount more, you're also going to be paying down the actual debt even slower. So you're getting hit on both ends in that way. Most people who are in this situation at this point of their rate going up in the next couple of years knows that it's coming. They've heard someone like myself, they've heard from their parents, they've heard from the news that when their rate renews, it's going to be significantly higher and it's going to result in a higher monthly payment. And it's good that they're aware of it, but in a lot of cases, they don't really know what to do. And really, there are 3 options you can take going forward. The first thing that a lot of people ask is, should I just sell this place now? And the answer to that is, if you like your home, probably not. Chances are, if you bought back in 2021 or 2022, regardless of what kind of product you bought, you're probably not in a position where you're going to make any money after realtor fees and lawyer fees selling that property. So the best advice is probably to stay put. It's not the time to sell if you don't have to. You've already taken that loss on paper, but as soon as you sell the house, you crystallize that loss. You are actually going to lose that money. And things aren't looking amazing right now in the real estate market, but there's a good chance that they'll bounce back and things will head in an upward direction again, especially if the governments stay as bad as they historically have been at building good housing supply that people actually want. The laws of supply and demand will dictate that the prices will go up again at some point. The other thing to keep in mind if you're considering this sell option is the market is in a bit of a weird place right now, depending on what market you're in and what property type you're in. If you own a condo in somewhere like Toronto or Vancouver, selling that property is going to be something that, even at a lower price than you paid for it, a significantly lower price, is going to be difficult to do right now. The same is true in markets like Ottawa and all over Ontario, but it's not as extreme as in those bigger markets where a lot of those dog crate condos were built, purchased by investors, and now they're trying to flip them and get rid of them because they don't make sense to hold on to anymore. The second option is to extend the amortization, and this is something that can be really appealing because it lessens the blow of that increased payment. Your monthly payment is not going to go up by as much if you go to that 30-year amortization as if you were to stay at the 25-year amortization. But this does have kind of hidden downsides that are not necessarily worth it. Your interest rate is going to go up, which we've already talked about. It's going to make it harder to pay down that mortgage in a timely manner. And if you extend the amortization, even more of that monthly payment that you're paying is going to be going towards interest rather than principal. So it's going to take you even longer to pay it down. You're going to be reducing your actual debt even less than if you had stayed at the previous 25-year amortization. So the advice I normally give people in this circumstance is, if you need to do it for your monthly cash flow to make sense to afford the things that you need, then you should go for the higher amortization, but not unless you absolutely have to. If you can afford to keep it at the lower amortization, it's generally best to pay it down as fast as you can. So that's what I would recommend that you do. Something else that people are considering in this circumstance is refinancing early. This is not generally something I would recommend unless the bank for some reason is offering you a really appealing rate, which if they're trying to get you to renew early, that's probably not what they're doing. They probably think they'll be able to renew you at a higher rate now. Otherwise, they would wait until the actual renewal period. You also tend to have a little more leverage at the renewal period because you could take your mortgage elsewhere if necessary. So that's the best position to be in if you want to negotiate a better rate. So again, unless you're getting a really, really sweet deal from your bank or mortgage broker, it's generally best to wait until the actual renewal period or right before the actual renewal point and go from there. Now, while mortgage payments are going to go up for 60% of people, which is most people, it's not going to be the same magnitude for everybody. If you had a variable rate, your payment has already gone up pretty significantly over the period that you have been living there. So it will be less of a blow in 2026 when you renew at the higher rate because you've already been feeling those increases as they've been happening over the past few years. And it probably didn't feel great while those payments were going up at the time. But the plus side of that, the silver lining, is that you already know what it's like to live with those higher mortgage payments. Whereas somebody who's been paying the same thing for 5 years in a fixed rate mortgage is about to have their monthly budget just blown up. Depending on the variable rate that you were locked into, you may even be able to set up a lower payment. This is a rare case though, and it won't be a much lower payment, but just to say that there's a big difference between those who are paying variable mortgages and those who are paying fixed mortgages in how this is going to impact them. So based on all this information, what can you do? The first thing you should do, if you haven't already, is to stop reading the news, stop watching YouTube videos, and go talk to a bank or mortgage broker to get a clear idea of what it is that you're going to be paying when you come up for renewal. Even if it's not till next year, you want to start preparing, you want to start putting money away if you need to, and adjusting your lifestyle so it's not such a big shock when it happens next year. The second thing you can do is shop around aggressively for mortgage rates. I tell this to people all the time, and it's one of the reasons I often recommend mortgage brokers over banks because mortgage brokers will do a lot of this negotiation for you. But shop around aggressively. The first rate that the bank is going to give you, even if it's their promotional rate, is generally not their best. Go from place to place. If you want to be at a specific institution, bring options from other institutions to show that they're offering you a lower rate and they may be able to match it. But don't just settle for the first one they're giving you. Some good negotiation in this period could save you thousands of dollars over the next few years. The other thing you can do, and this is only if you're in a good financial position and actually have the money to do this, so this definitely won't be everybody with the way the cost of living has been over the last few years, but if you have money put away, now might be a good time to consider a lump sum payment. Every mortgage contract is different, but a lot of them will allow around a 20% payment per year in order to reduce the principal. So it might be good to do this in advance, especially if your rate is about to jump and you're about to be paying less principal every single month. Now, this video has mostly been focusing on the seller side of the equation so far, which is pretty much all the bad news. But if you're on the buy side, if you're looking to sell something and upsize into something else, or if you're a first-time buyer looking to get into the market, the mortgage rates are definitely going to make it harder, and the amount that you're going to be pre-approved for is going to be significantly lower than what you would have been able to get a couple of years ago. But there's been a big increase in inventory so far this year, especially if you're looking in the condo market. And you're in a much stronger negotiating position than you were a few years ago. So you're not going to be competing with as many people. You'll be able to take your time, shop around, and negotiate once you find the place that works for you. So the bottom line here is mortgage payments are not going back down to where they were in 2020 to 2022. That's just not going to happen. We're not going to see sub 2% 5-year fixed mortgages again for God knows when. Like, I don't know how long it's going to be, but if you have that thought in your head, if you're holding on to that hope, it's not coming. And payment shocks are coming as a result of that for many Canadians. That's something that's unavoidable, especially those that are locked into fixed rate mortgages that have been paying really reasonable payments for the last few years. Those are about to go up. And this isn't just theoretical to me either. We had to renew our mortgage in the last year, and it was a significant increase in the payment. But I don't want to base this just off of my experience. So if you are someone who has a renewal coming or you've renewed recently, what sort of product did you have? What sort of product did you go with? And how did it go? I genuinely want to hear stories from people who have gone through something similar and how it's affected your lifestyle. Drop a story or a question in the comments if you have it. And if you have any questions about the real estate market in general, I am always here to answer those questions. Don't ever hesitate to reach out. There's no obligation if you do. I'm not going to try and hard sell you on anything. I genuinely just want to give whatever information I can to make this difficult time for a lot of people a little bit easier. The one thing I will ask is if you did find some value here, please consider liking and subscribing so the video finds its way to more people just like yourself. Thank you so much for taking some time out of your day to watch, and have a wonderful week. Take care.